Americans for Fair Taxation presents the Weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, September 11th, 2020. Evasion under the FAIRtax. Over the years, there have been many attempts by swamp minions to dismiss the FAIRtax. With absolutely no evidence at all, they have loudly asserted there will be much more evasion with the FAIRtax than there is with the income tax. Well, that is patently absurd and makes you feel like you're debating with someone who still insists that the earth is flat. There was a time when FAIRtax supporters did not have any actual studies addressing this point. The NTRC, that's the National Tax Research Center, contracted with Dr. Sebula to prepare an excellent study on income tax evasion in the United States. The NTRC also contracted with David Burton to do a study addressing evasion under a retail sales tax like the FAIRtax. Below is the introduction to the Burton study and his executive summary. Introduction, quoting now. In the attached study, David R. Burton illustrates how to materially reduce evasion of federal taxes in the United States. Reducing tax evasion is important because at more than $400 billion per year in 2006, the tax gap, now that's the difference between taxes owed and taxes paid, is more than 1/6 the federal revenue. Unfortunately, 2006 figures are very likely outdated, and other experts conclude that the tax gap has likely increased significantly and is likely to continue to grow. For example, in 2017, Richard Sebula and Fiorentina Angelari Daci estimated that the tax gap was $693 billion in 2017 and will likely increase to nearly $1.2 trillion by 2026. The aggregate tax burden per household created by the tax gap for the 10 years ending in 2026 would be $68,328, more than the average household income in 2015. In other words, the average American household will be working for more than one full year in the next 10 solely to pay for the surtax created by tax evaders. Collecting the tax would materially relieve a burden currently borne by honest taxpayers and potentially restore faith in the federal government's ability to fairly collect taxes. End of quote. Now, here's his executive summary. The FAIRtax will reduce tax evasion by at least $38 to $52 billion per year. Now, that's a 9.4 to 12.8% reduction. Now, let's look at the tax evasion problem. Again, the existing tax gap is significant, and the tax gap, again, is the difference between taxes owed and taxes paid. At $406 billion, the 2006 tax gap was 2.9% of gross domestic product, or 1/6 the federal revenues. Let's look at lower marginal tax rates. Both economic theory and empirical studies show that taxpayers evade less when marginal tax rates are lower. The current average marginal tax rate, including payroll taxes, is approximately 37%. The FAIRtax marginal rate is 23%. Now, lower marginal tax rates decrease tax evasion because the incentives and rewards for cheating decline. Because of lower marginal tax rates, evasion can be expected to decline by 9.4 to 12.8%. It's likely that the FAIRtax will reduce tax evasion by significantly more than the estimated $38 to $52 billion when other factors, not quantified in the study due to lack of data, are considered. These factors include reducing the number of collection points, increasing the likelihood of tax evasion being discovered, reducing complexity of the tax law substantially, increasing the clarity of penalties, and increasing perceived fairness. Let's talk about reducing the number of collection points. The FAIRtax will reduce the number of tax return filers by approximately 94%, from nearly 250 million to fewer than 15 million. Moreover, approximately 3.5% of all businesses account for more than 85% of total retail sales. These businesses are primarily large to medium-sized retailers who have a very high sales tax compliance rate. As with existing state sales taxes, the fair tax will impose tax collection at the point of sale, essentially the same as the income tax withholding from salary and wages. Third-party withholding has been shown to increase compliance. Now, how about the increasing the likelihood of evasion being discovered? A decrease in the number of collection points, i.e. tax filers, will increase the likelihood that tax evasion is discovered by tax authorities. The likelihood of discovery is partially a function of audit rates, which will increase because audit resources will be focused more narrowly. Let's look at reducing complexity. The fair tax will greatly simplify the tax system. Any income tax has structural complexities that a sales tax simply doesn't have, such as depreciation, inventory accounting, qualified retirement accounts, and tracking and reporting of interest income, dividends, and capital gains. None of these sources of complexity would be present under the fair tax. Complexity increases non-compliance for several reasons. First, the sheer complexity of the tax system creates confusion so that even honest taxpayers who wish to comply are often non-compliant. In addition, complexity creates ambiguities that aggressive taxpayers exploit. And finally, complexity enables tax evaders to more fruitfully evade taxes by knowingly taking unwarranted positions on tax returns and then, if detected, plausibly claiming that it was unintentional. Increasing the clarity of penalties. The fair tax replaces dozens of poorly understood penalties with 10 clear penalties. Clarity should improve taxpayer understanding of penalties and contribute to higher levels of compliance. Increasing perceived fairness. The fair tax will likely create a greater sense of fairness that will lead to greater compliance. When taxpayers believe that other taxpayers are cheating the system and not paying their fair share, they are more likely to cheat themselves. The sense of unfairness is often a function of deliberate policy choices that are perceived as loopholes in the income tax system. The fair tax contains no loopholes. A public opinion poll conducted by Rasmussen Reports found that sales taxes are perceived as the fairest means of taxation. Sales tax gaps are typically lower. Sales tax gaps are typically lower than the federal income tax gap. For example, the California Board of Equalization estimated that its sales and use tax gap is only 5.5%. The state of Washington Department of Revenue estimates its combined sales and use tax gap at 2.1%. The net federal income tax gap is about 17%. And remember, the fair tax replaces all federal income and payroll taxes with a national retail sales tax on new goods and services. And thus ends the executive summary. In conclusion now, the NTRC instructed Mr. Burton to be very conservative in his conclusions and assure that they were based on government numbers that could easily be defended when he testifies before Congress about evasion. Now, all of us know that the fair tax will not completely eliminate evasion, but as Mr. Burton points out, there will be much less evasion with the fair tax than under the present income payroll tax system. We ask that you please share both the Sebula and Burton studies with your elected representatives. It's even useful for those of you living in states with a state income tax to show them to your state representatives. If they say, well, wait a minute, this is just for federal taxes, just agree and then ask them, well, if someone is evading federal income taxes, is it not reasonable to believe that they're also evading state income taxes? If they're honest, they will admit that's probably true. In that case, the Burton study is very material because reduced evasion of federal sales taxes will also result in reduced evasion of state sales taxes. Now, if you have friends who don't know about the fair tax, send them to FAIRtax.org. Have them watch the whiteboards under How It Works, and if they agree, ask them to please join us. And then contact your members of Congress and the President and demand that Congress pass the fair tax, the only truly fair tax.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at FAIRtax.org.